future. We're talking real money.
Hey, let me give you a phone number real quick for talking real money. It's 855-935-TALK, 855-935-8255, because we're going to talk about money. We're going to talk about money and all the things you do with your money. We're going to talk about some of the people who do things with your money who shouldn't be doing some of the things we think that they are doing with your money. And to that end, hi, everybody. I'm Don McDonald. Tom Cock is over there. And we interrupt today's scheduled topic to bring you the following topic that we just discovered. And both of us are incredulous.
I think that's the right word. I'm floored.
We can't find it anywhere else in the financial media. And it strikes us that this, for investors in this country, is a pretty darn big story.
No, it's massive.
So here's the deal. Got a call. Was going to incorporate it into the show. And in the call, the caller asked, what should I do with these Vanguard funds I own that are now charging a purchase and redemption fee? And I thought to myself, Vanguard doesn't charge purchase and redemption fees for their funds.
That sounds like, isn't there a C word that it starts with C, it ends with?
Yeah, I mean, okay, if you charge somebody, let's say you charge somebody 1% to get into a mutual fund, it's a commission. Yeah. It's
that's the word. Yeah, right. Yeah,
it's an extra fee. So I thought, no, this can't be real. So I did a little research. And I went to a page at Vanguard.com. You just search for it at Vanguard's personal investor side. Vanguard Mutual Fund Fees and Minimums is the title. And there's a button first it says, very few Vanguard funds charge fees when you buy and sell shares. The fees are designed.
Well, it used to be zero funds until recently. It wasn't any.
The funds are designed to help those funds cover high transaction costs and protect long-term investors by discouraging short-term speculative trading. Oh, wait. This does ring a familiar bell now, because they did it to discourage traders.
They don't want market timing with their funds. I get that, of course, because it's expensive to the people that holds them.
Yeah, but the thing is, these fees are really high. I mean, emerging markets government bond index, 0.75. Global.
Then you add that to the cost of the fund at 0.1 or whatever. Now you're.
Yeah, no, it's actually
really
it's
expensive.
About that. The one that's the most shocking is why would this be a trader's fund? The long-term corporate bond index Admiral shares.
You wouldn't think so.
1% to get into that.
That discourages trading.
Long-term corporate institutional 1%. So they have some that are 0.25%, some that are 1%. And the funny thing is they've got some that have it going in and not going out, and some that have it going in and going out. And it just...
Okay, that's part one of the... I remember when you sent this to me, I said their site got hacked.
Yeah, you did.
Because this is so non-Vanguard. Like, you got to go refresh, you got to do something. It's up on their own site. Number two, I can't find it anywhere in the financial media, anywhere from the Wall Street Journal to Barron's to Investor Business Daily. And you would think this would be a fairly decent-sized story because Vanguard has been the king of indexing, do-it-yourselfers, low cost. Of course, they were good on customer service. They didn't used to charge you for things like getting your paper statements. They have changed things, Don, the last few years. So it's a bit different than it was.
And it's funny because this caller said they're just doing this to me. So it strikes me that to this client, it's something new. And honestly, I cannot find a single news story about it anywhere. I don't know how that's managed to slip under everybody's radar.
Either.
But it's something to be aware of now. It used to be that, Schwab would charge you a fee on Vanguard's funds because they didn't get any money otherwise. But they
would hold them in that portfolio, but they weren't getting anything from the funds. They said, well, now we got to get something because we're doing the work.
For Vanguard to do it, particularly on some of those funds, really truly surprises me, and it doesn't seem to be the smartest strategy.
Well, it's another problem. As we mentioned, Vanguard's had several the last few years between customer service, charging for statements, etc. And another reason maybe just to use exchange-traded funds.
That is exactly what I was thinking. I was thinking the days of the mutual fund are now probably coming to an end. 855-935-TALK.
Tom and Don are talking real money.
Do me a favor. Grab your latest investment statements if you know where they are. How many do you have? A lot? How many different investments are in each statement? A bunch? Do you own individual stocks, bonds, sector funds, and stuff you don't understand? Yeah, I thought so. I'm Don McDonald, and I'm pretty sure you have a case of hodgepodgeitis. But don't worry, it's not terminal and can be cured. But it takes three things: a bit of time, some fiduciary guidance, and a plan. There's a problem, though. Most financial advisors can't or won't provide any of those. That's where we come in. Tom and I will provide you the help you need to overcome hodgepodgeitis in a free, no-obligation meeting with an Appella advisor at TalkingRealMoney.com. So, scan or take a picture of all those pages you gathered, then go to TalkingRealMoney.com, click on Meet an Advisor, and set up a free appointment online or by phone when it's convenient for you. Let us sort through the mess and help you get started on a better, simpler future plan. Just go to TalkingRealMoney.com or call 800-386-3004.
Your guides to a really great financial future. Tom and Don are talking real money.
Now that we have the wacky Vanguard news out of the way, by the way, our phone number is 855-935-TALK, 855-935-8255. And, you know, the argument that it's to reduce trading just doesn't hold water anymore with ETFs.
Exchange-traded funds. You can sell, buy. So you can crank that out as much as you like. There's no reason. So
and there are products
really
there are products for everything that Vanguard is charging a fee on in ETFs. It makes no sense. Anyway, the main topic of the day is the fact that we will, Tom and I will never, ever, ever, ever be obsoleted in our message. Our message will never be obsolete. And that is, where do you find the right help with your money? I was looking at our town Facebook group for our little town here in Florida. And
first of all, what are you doing on Facebook? Come on.
Well, I keep up. This is how I keep up with the little town. So somebody posts any financial advisors you'd recommend in town. Now, one would think if we had any impact at all, that there would have at least been one fee-only 100% fiduciary advisor mentioned. The first one mentioned was a guy I know who is with Morgan Stanley.
Yeah, shocker there. Okay.
Yeah, Somebody said, oh, he's great. Then another one was a broker. He's amazing. Another one who's with Ed Jones, one of the people said, he's the best. So nice. So nice. Another one recommended him. Another one said the Merrill Lynch office. Another one said something called the Good Life companies. And both are generous givers to our community and trustworthy, and they run their business with integrity. It's fascinating. Not a single fee only. As a matter of fact, the only post that even mentioned fee only is from some guy who said, as an old recovered commission stockbroker and 35-year financial talk show host, I would suggest you listen to Talking Real Money for a while first. Oh. If you must hire an advisor, please check this resource, TalkingRealMoney.com/help. Hiring an advisor is a huge decision, and I believe you should only work with a 100% fiduciary fee-only, not fee and commission, registered investment advisor. Got no responses.
No, it's good to know that it's good to know that that sort of great information is being provided on Facebook. But you know, you go to Forbes, you ask them, guess what they say? Guess what Forbes says?
Ask your neighbors.
How to choose a financial advisor. No, ask friends, family, and peers for a recommendation. Or if that doesn't work, look online.
Oh yeah.
Now I don't know if sure, type that in.
Oh, okay. Hold on.
Probably
financial
not the best
advisor. Yeah. Okay, I'm going to type that in. First thing that comes up is Edelman Financial Engines. Because
they spend a lot of money on that.
That's a paid spot.
Yeah, thank you.
Then somebody called First Horizon. I don't know who they are. That's a paid spot. Edward Jones is really the first firm that pops up, non-paid. Edward Jones.
And they, just so you know, they are not a 100% fiduciary.
No, they aren't. They definitely aren't. As a matter of fact, because Edward Jones came up so much in the story, I did some more Ed Jones checking again just to make sure. And again, the managed money, their fee-based account, both of their fee-based accounts are wrap funds. They are not specifically created for the client. They have certain portfolios, and they state as much. These are not specific to the client. And they charge for those 1.35. Actually, it's 1.35 on the first $250,000. It's 1.3 on average for the first $1 million. And then they charge 0.09 to 0.19 extra fee. And then the funds...
Wait, 1.3 plus almost another 1%?
No. 0.09 or 0.19.
Oh, okay. All right.
So 1/10 to 2/10 plus
so 1.5
30 to
talking,
60 basis points for the funds.
Now you're back at 2+%. It's
right, and you're not
a lot
getting
of money.
and you're not getting personalized portfolio advice.
That's crazy.
You're getting the same
crazy.
thing that's given to everybody of the same situation. So if you think you're getting personalized advice from your Ed Jones person, think again. It even says so in their ADV. It says so. It says this is not personalized to you.
But I gotta ask, rather than friends, family, peers, and online searches, where do you go?
If I had the answer to that question, I would solve most of the world's financial advice problems. I don't know.
I got a couple ideas.
Well, I know, but I don't know a foolproof way to do it, and a good way, because all of the resources are, in many ways, only a half solution at best.
Yeah, that's right.
You talked about NAPFA, National Association of
Planners.
Financial Planning.
Financial planners. Yep.
And they'll give you people who are fee only.
Yeah.
100% fiduciaries. But we looked up a few of them. We looked them up right there in Bellevue. And the first one that came up in Bellevue was for a company out of Chicago that charges as much as, this does not include the fund fees, just the management fees. They charge 2% at the highest end, which is like Ed Jones. It's just ridiculously high. And they consider that themselves a fiduciary at 2%. And again, there's no regulation as to where the fiduciary definition starts fee-wise.
No, and if you're paying 2, that's the same. I know it's very high. Right now, we're paying $5 a gallon roughly for a gallon of gas. Mm-hmm. If you're paying 2% to have your money managed, get planning, et cetera, that's like paying $10 a gallon because you can get it for half of that. And you can get it
You can get it for half of that or less than half of that.
Or less than that. Yeah, right. I'm talking on the first $1 million. Mm-hmm. You can get it for a lot less for the bigger account. So you're way overpaying. Way.
We don't know with an advisor like that which funds they use. You can be a fiduciary advisor and use actively managed high-cost, non-loaded mutual funds. You can. They do. We know they do. We see their portfolios.
Yep. Mm-hmm. Painful.
So that's my problem is what's somebody to do? That's to you.
Friends, family, peers.
There you go.
And online. Do an online search.
Guess here's what go ahead.
No, let me finish because you asked me. You could go to NAPFA. You could get the ag recommendations. I think dimensional funds has some recommendations too. But then you got to do the work, as you said. It's not a complete solution. Then you've got to look at the fees and the type of funds they use and make sure the strategy's right, that the charge is right. There's work still to be done. It's not just as simple as I'll pick that one and go with them.
Well, and the thing you have to. This is the hardest part of all. For us as humans, being emotional creatures, is you have to wring the emotion out of it. You really shouldn't care about how nice they are. That should not be your primary criteria. It should be the business aspect.
You're killing my business advantage.
Well, I know. This is the only advantage Tom has, is that he's nice. But the fact is, you've got to ask the hard questions. How much do you charge? How do you manage money? What would you do given this situation? What kind of questions are you going to ask me? What things do you need from me? What are you going to do about distributions in the future? You got to ask hard questions and then call us, 855-935-TALK.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
And we invite you to give us a call at 855-935-TALK, 855-935-8255. We got a very special call because when he's not working at Christmas really hard to take care of all the good little girls and boys, this guy lives at the North Pole, and they call him Scott. That's just, instead of Santa, they just call him Scott.
Doesn't get confused.
So we have Scott calling us from North Pole, Alaska. Hi, Scott. Yeah, sorry.
Scott? Sandy? Yeah.
I thought you were going to keep my alias and not use my real name.
Don't trust the media. Do not trust the media.
You can't call into a live radio show
and not be outed.
Anonymous. I'm sorry, dude.
Yeah. What can we do for you, Scott? Sorry, we're just kidding around with you. What's up?
Well, I have a question, or maybe two questions, depending on how you answer. So my question is, I know that my traditional 401k, whenever I make withdrawals, will be taxed as ordinary income. So does that mean that I pay Social Security tax on that?
Tommy?
It depends on how much that is. Possible, yes, you could. Depends on how much your income is, correct. There isn't just I can't just say yes or no because I don't know how much you're paying in income, so yes.
Okay. Well, the reason I ask is because I have too much to make a Roth conversion, because what I understand is you have to take a percentage every time you make a conversion. You got to take a percentage of what you have in your traditional to make it Roth, right? Is that correct?
If it's in your individual retirement account, yes. If it's an employer plan, no. Is it in an IRA?
Well, I have some in an IRA and some in the majority is in my 401k.
Okay, the 401k that's 401k. Off the table. Yeah, you don't have to worry about that if you're doing conversions. How much is in the individual retirement account?
About $400,000.
Okay. So, and what you're trying to, how old are you, Scott? You're really old, right? Because you've been delivering stuff for a long time. Oh, 59 and a half. Okay.
Yeah.
So here, and how much longer are you going to work?
Well,
income-wise,
I was thinking, well, at my current job, I plan on working about a year and a half, and then moving. So I would find something to do, but my income will be lower.
Okay,
So,
Tom, I need to. I think I have a correction.
Okay.
I just was looking online, and I thought I wasn't sure. When you take an IRA deduction or a 401k deduction, you don't pay taxes on that amount of income, but you do.
No, he was talking about if you take money out of your 401k.
I know, but what I'm saying is
have Social Security.
Is the money you put in your 401k or IRA, even though you don't pay income tax, you still pay FICA. So therefore, you've already paid FICA on it.
Okay.
Okay. But we're getting. He's getting.
Yeah. No. That's right. Then when he takes it out of the IRA, this specifically says when you take money out of a 401k or an IRA, you've already paid FICA taxes, so you will only pay income tax on it.
Yeah.
You won't pay FICA.
Makes sense.
Yeah.
I just want to make sure because at your relative young age, I wouldn't do any Roth conversions yet until my income went down. Then I might just do it year by year, depending on how much my income was.
Well, see, the reason I ask is because I was thinking that I would take, when my income goes down, I would take withdrawals and then convert them with my other income that I won't need that money to live on. And if I paid Social Security tax, it would increase my yearly wage to bring my Social Security up because I'd have those years of lower income.
Yeah, no, I think your thinking is right. And you should be waiting on your Social Security for a long time, too, correct?
Well, I don't know. My longevity in my family is about 60.
Okay. Fair enough.
Yeah, because that is an issue. You should consider longevity as part of that, although you could be the exception. We don't know. We hope so. Thanks for the call, Scott.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Hi, everybody. Don McDonald here, along with Thomas Charles Koch the 14th, and
Going way back to old England days.
Long
Yeah, sure.
line
Yeah,
of
okay,
royal roosters, the royal roosters.
Royal roasters, probably.
Our phone number is 855-935-TALK, 855-935-8255. So call us, kind of like John did. Hi, John. Welcome to the show.
Hey, guys. Thank you for taking my call.
Our pleasure.
My mom is 59, and my father just died recently. She talked to Social Security, and they told her that she would get a widow benefit, and they said it would kick in at 60 years old. And I was just trying to see what kind of benefit that would be. Would that be his full retirement age benefit, as if he applied for full retirement?
Well, one, sorry to hear about your dad.
Yeah, that's horrible.
I appreciate it.
Yeah, hold on. I think it is, but I'm trying to.
It sounds likely, but we'd have to look at. Social Security has a lot of.
Yeah, you get.
A lot of rules.
Yeah, you get the surviving spouse gets
full retirement benefit.
Yeah, the 100% of the deceased workers.
So whatever your dad would have had at his full retirement
which
age,
is
FRA.
67 right, probably for his age, right? FRA.
No, well, yeah,
Right.
depends on the year he's born, but so full retirement age.
Yep.
Yeah. Okay. And
as a matter of fact, if you go to ssa.gov and put in his information, you can find out exactly what that widow's benefit. It'll show you, give you the exact number of that benefit.
Okay. And I just had one other question,
Sure.
if you have time.
We do.
She's going to sell the home. Will she still be able to receive the married filing jointly $500,000 capital gains benefit?
Yes,
or
she
is
will.
she now single and only gets $250,000?
No, because well, one, she could get a step up on a capital gain too.
She could get the step up
She gets
on
the step
his
up.
portion of the house.
Yeah, on his portion of the house. She should. Yeah, it's a capital
Whatever
gain.
it's worth when he passed.
Affect. Yeah, boy, I don't know that, Don. I'm gonna let you say that. I'm gonna hang my head on that one. I guess that's. I don't know that rule. I don't. Frankly, we'd have somebody can call us and tell us, or one of our advisors who's out on their fancy boat could stop. Give us a call and tell us, but I don't know that.
I believe, sir. I'm going to go out on a limb. I am pretty sure I know this. I am confident. I've talked about this before a long time ago. Surviving spouses, and this is the only exception. Yeah, no, this is right. Surviving spouses get the $500,000 exemption if they sell the house within X number of years, and I don't remember how many years it is. I think they give them 2.
It makes sense in a lot of ways.
It does.
Right? So you
it does.
understand
But
what we're
I
saying.
do remember. I'm 99.999% sure that I've talked about this before a long time ago, and the entire exemption goes to the surviving spouse within a couple of years because they give them time to sell. I just remember that coming
So that
up.
means she's going to get $500,000 less on any capital gains tax you would have to pay. Not the tax, but the
value,
difference between the selling and and the basis. Yeah, right, correct.
Yep. So she's good. She's financially she'll be in good shape.
Okay. Yeah, we expect the gain to be $350. So we were just trying to see
Perfect.
if she got the full 500, and it sounds like that's likely.
She'll get the whole thing. She won't pay any capital gains on the sale of the house. And remember, if he owned any security, she gets a step up on the cost basis to the value at the time of his death. So there are a lot of advantages so that spouses aren't hit hard, so that those who inherit aren't hit hard with taxes.
Okay, great. Thank you guys so much for your help.
You're very welcome. Thanks for the call.
Thanks, John, and take care of your mom. Take care of yourself.
Yeah, it's tough.
Yeah, it's there's another passing today, Bob Barker. And why am I bringing up Bob Barker?
We weren't close. Bob and I were not close.
No, you didn't. No. You have men of similar age,
but Tom has a reason. Yeah,
we'll get to it when we come back.
Oh, you want to make
this little teaser?
Why
Why
it matters?
Why this is really important?
I just feel something really, truly trivial coming up. I really do.
Nope, not.
Yeah, no, I feel it. I feel it. We'll see.
Tom and Don are talking real money.
Do you suffer from hodgepodgeitis? I'm Don McDonald, and hodgepodgeitis is a disease of your investment portfolio whose symptoms include lots of stocks, loads of random loaded mutual funds, and maybe an annuity or two. Most who suffer from hodgepodgeitis dread opening their quarterly portfolio statements. They feel lost and confused. Investing seems overwhelming and the financial future uncertain. If you believe you suffer from hodgepodgeitis, see a 100% fiduciary investment advisor immediately. A proper diagnosis is the first step to creating a portfolio with a purpose based on a personal plan. Start on the road to recovery now by scheduling a free meeting with an Appella advisor at TalkingRealMoney.com. There is no cost, obligation, or high-pressure sales pitch. Take the first step at TalkingRealMoney.com or call 800-386-3004. Hodgepodgeitis is not a real disease, but treating it has been shown to improve mood, reduce fear, and even lead to a brighter financial future. Results may vary.
Your guides to a really great financial future. Tom and Don are talking real money.
Hello again. Welcome back to Talking Real Money. I'm Don. That's Tom. Our number is 855-935-8255. And before the break, Tom made mention of the passing of 99-year-old host of Truth or Consequences for you really old people, or The Price is Right for you semi-old people, and for you young people, he was before Drew Carey. And Tom wanted to mention,
good point. Thank you.
In his inimitable way, which means unimitatable, thank God, way, what the significance was to the financial industry of Bob Barker.
It is, not was. It is.
No, it still is, even though he is no longer with us.
It is.
His impact on the financial services industry remains to this day. Go ahead.
Okay, the show of which he's most often associated with is called The Price is Right.
No, Truth or Consequences. They even have a town.
The Price is Right.
Truth or Consequences.
No,
New
nobody
Mexico.
knows that show. That 1,000 years ago.
Price is
Right. The Price is Right.
Yeah.
The thing is, if people would believe that about not just the show, but about their securities purchases, their life would be better, because I argue with you all the time when you come in and say, well, it's selling for $15 a share, but it's really worth 18 or 20 or whatever it is. No, the price is right.
At that
You've
moment,
got to accept
the price
it, and
is
this
right.
is hard. Exactly. It is correct. The market is efficient. Gene Fama is correct. Well, that moment, that's what the price is. So I'm thanking Bob for that, because more people should agree to that.
That's a significant point. It's a little roundabout getting there, but
it is.
You're right.
It's
you're right.
Weird,
Prices,
but it's there. Yeah.
Because when you have hundreds of thousands or millions of people all looking at the value of a security simultaneously, they are a relatively efficient arbiter of price. It's like the jelly bean game.
$675 billion a day in trades.
Yeah, it's like the jelly bean game. Very few people ever get the number of jelly beans in the jar right, but it's so funny when you take the aggregate of all the guesses, it comes in really darn close to the actual number.
There you go.
The crowd.
The wisdom of crowds.
Wisdom of crowds. And we want to hear...
God bless you, Bob.
We want to hear the wisdom of you at 855-935-TALK, or the questions of you. Either one. We'll take them both. Don, welcome to the show hosted by Don and Tom. Hi, Don.
Hey, Don and Tom. How's it going?
Good.
You were talking with the guy who lost his father, I think. Whatever. And they were talking about his mother was going to sell the house.
Yeah.
I don't think he'll have any gain, because when you, as you said, the stepped-up basis, the cost of the house becomes the date of death. So whatever the house is on the date of death, that's going to be the new cost. And if he's selling it right after that, it's going to be a very little gain, and then the $500,000 kicks in. So it won't be no taxes on that transaction.
I see what you're saying. In other words, the basis goes up to the date of death of the decedent.
It's 50%.
I don't know if that's true, though, because they both owned it. I was wondering.
It's 50%.
Right, but then she's going to kick in her 50% as well.
But she's still alive, so she doesn't get a step up.
Right.
There'd be a step up on his half, but she would still have a capital gain on her half. So there would have to be some capital gain exclusion But the net result is the same. She is going to pay on a $350,000 gain on her primary residence. She is going to pay nothing in income tax. Not a penny.
That is correct.
Which again, I think makes it's common sense. But no, Don, thank you for helping us be right about that.
Thanks, Don. We appreciate
I can't
you.
keep track of all these tax things. I'm
I know.
lucky enough to find my way to the office. Come on. I mean, come on. It
Yeah.
just drives me crazy.
I just
Social Security? Come on, give us some easy ones here.
we just
Yeah,
got
no
our
problem.
K1s from the company. Now that means Tom will
Did you
take.
see how long it was?
It was a long time.
How many pages?
Yeah, it was a long K1. Anyway,
No.
Tom's going to take his to his accountant,
Yeah.
and I, like a fool, am going to do my own.
Good luck with that. It's 43 pages long.
I know. I saw.
I almost fell down when I looked at it last night. Like 43 really takes that.
Did you
anyway.
print it?
Wow.
Did you print
No,
it?
I did not print it. I
Oh,
looked at it.
good.
I was like, I'm not printing it.
Some people
No, I
insist
did
on
not print it.
printing stuff, like my wife.
No.
It's like she'll get anything on paper. She goes, I need to print that. Why? I hate the printer. The printer always breaks. It's out of ink. It gets jammed. It gets the little heads, the little squirty heads get all clogged up, and you have to use like 30 gallons of ink to clean the heads out. And like $1,000 later, you're going, they're still not clean. I hate printers.
We got one. We have a nicer one that doesn't. It's something fancier. It was a lot more expensive, but they said you wouldn't have to do anything to the printer ink for a long time, and that's been true.
How many millions of dollars
Anyway.
did that device cost? It's like a giant behemoth.
I think it costs more than my car.
Yeah.
No,
I hate.
kidding.
Nothing should
but
be
no,
printed.
You're right. No, I did not print it. The minute I saw 43, I was going to if it was like 8 or 9 because it's easier for me to read. That's probably why your wife likes it.
It is.
But,
No, it's why it's easier for her to
I
read.
looked at it. 43 pages. No way.
Plus,
No, not gonna do it.
she's like me. She's getting up there. The eyes ain't what they used to be. Anyway, 855-935-TALK is our phone number.
That works that works to your benefit, by the way. The fact that
Oh,
can't
God,
see
yeah.
as
She
well.
thinks I'm still good looking.
I know, that's what I'm saying.
I mean, look at this mug. Come on. Good voice. Yeah, sure.
Across the room, you look
Sure.
like you could barely 60 years old.
The rest of me, I'm old. And I look every bit of it. It's so funny. We'll this has nothing to do with money, but it is funny. When we'll meet with people and they'll like a younger couple, and Debbie will say something like, well, be talking about age, and she goes, well, how old do you think I am? And they'll go, oh, I don't know, late 40s, maybe to mid 50s. And then she'll go, how old do you think he is? And they'll go, I don't know, late 60s, early 70s.
105.
She goes, we're the same age. And they go, whoa, you look good. See, that's a way to get a, whoa, you look good.
Oh.
Because she does. She looks so
Wait,
much younger
are you
than
really?
me.
I thought she was younger than you.
Oh, by
She's younger than you.
9 months.
Oh, okay. I thought she and I were born the same year. I guess I'm
You were
wrong.
57 or 58?
58.
No, you weren't born the same year.
Yeah.
Yeah. She's older than you.
Oh,
She
okay.
is your senior. She
Saluting now,
Yeah,
stepping smartly to the rear. So there you go.
Yeah. So anyway, here's the deal. We are here every Saturday. Now, you may hear this program on a Tuesday, but if you want to call us and talk with us, we would encourage you to hold off until Saturday, starting at 3 p.m. Eastern Time, noon Pacific, and give us a call at 855-935-TALK. Because while we take your questions a variety of other ways, including we record the calls and use some of them, and you can send in your questions at talkingrealmoney.com. You can even speak them there, which is really cool. And those are the ones we use on the Friday Q&A podcast. But if you call live on Saturdays...
And I just got a confirmation.
Then we can talk. What? You got a confirmation on what? That I look old?
Confirmation on the step up. It says when one spouse dies, 100% step up in basis.
Oh, well, see, I was wrong.
There you go.
I'm just reading a 50% online. Isn't that weird?
Yeah.
We'll be back.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Hey, welcome back. I'm Don. Tom's there. And remember, you can call us at 855-935-TALK. But if you need more help, you need because we can't give you an hour here on the show. It would make for a boring hour. But we can give you a boring hour with Tom Or a boring hour with one of our other advisors.
I'm good at that. I'm really good at the boring hour thing.
And
yeah, okay. If you want that, if you want some individual help,
yeah,
I'll tell you where to go. Is that okay? Yeah, talkingrealmoney.com.
He tells
Click
me where to go all the
Meet
time.
an advisor.
Talkingrealmoney.com. Meet an advisor.
Or the phone still works. 800-386-3004. That is toll free. Available in every state. 800
They still have phones?
386-3004. Call now.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.